Welcome to TradeTheNBA.com. This is Jonas Reports for the 1st of August, and well, let's just get right to it. I mean, we talked about it. We had the weakness develop, and I said that it would be one day where you would just pretty much wipe out the gains of a month. So if we go to the beginning of July, which was right here. There we go. Yeah, hey, bingo. One day. Nice. Okay. No big surprise with this. The Fed, everybody was waiting for a much bigger move by the Fed, quarter point, while helpful, don't get me wrong, all you were doing was reversing the errors from a year plus ago, and you didn't really do anything that wonderful. So two basis points would have been better with the 50 half point cut as opposed to a quarter, but you know, you got to take what you can get. At least it's the right direction as opposed to the wrong direction. And is it going to help that much? Yeah, probably not. But given the destabilization that's taking place, overseas and stuff like that, and this currency battle that I've been talking to you about is real, and that's where the fundamentals are at this particular point. Now you can see that we had steel crossover on the S&P as well as on the NASDAQ here. That should be enough to give it a little boing, but that's got to move up pretty rapidly with a drop of cyan for it to trigger, and usually I look for that crossover. It's got to happen within 3 to 4 bars, so within a week we'll know, and that'll be just in time for new fund money to be arriving at the start of next week. So we will keep an eye out for that. But definitely, we have our markers. I mean, obviously the 76%, once you're below the ABM green, you got nothing. The NASDAQ's just moving back above it. The same with the others. So, hey, that's pretty much where that is. Now, this is the fear of bird exit and the U.S. backing off with the rate cut there. And I warned about this, that this was going to start to get scary time. No reset here. And you know the U.S. is not going to be thrilled with this, whether or not the Fed has it in it right now to jump into it to try and hold up the euro, or if they've just abandoned that idea. But, the euro, bleak situation in general. It was interesting. I was just reading an article literally today about how while Europeans get all these wonderful vacations, most of them can't afford to go on a vacation. That's a good indication of where the Eurozone is at this particular stage. Gold, a little bit of a retrace, because with all this rate cutting, there really is not this idea of pent-up inflation, but that's really not where and why gold is where it's at right now. I think this is probably going to be the best run you'll see for cryptos in that going forward, simply because it's going to be an alternative stash of value outside of fiat currencies. And the 50K, well, I just thought I would show it. I mean, I was short pretty much from the peak up here at the start of the day, and even when it came down, we covered a portion of it, but just merely added back into it at every opportunity I got, because we really weren't seeing any resets that were stable. This one finally came right about at the peak here at the 50%, but it didn't take long for that steel to drop back below cyan with green under red. And those are the attack points. And I kind of put that up over here. After we had the big dip, you always get a bounce back rally that develops into that. It's just a matter of waiting. We had resets that came through here, and in the final stretch of them, though, every time you get that green crossing back below, and you're not really making newer highs from a shakeout standpoint, you're always concerned at that stage of the game. And in this particular case, it really just started to cascade back again lower, and just now had gotten the pre-market here, the dip below. And again, this is something I talk about, so I look at it right here when it it dipped back below the red right there by just literally 1/100th, minus 461 to 460, and then it's just a count of, in this case, 1, 2, 3, 4, 4 bars going across before it finally clicked over, and so that gives you the indication that it's got enough juice, especially in this case with the orange going below. So you would look for that to try and move higher. And plus, with the following Morganacci lines, you would expect price is going to want to try and get to the 100. The question is how far across you go and whether the 100% hits you prior to. I still think overall that we can see that there's some inherent weakness built into this setup overall. Might as well just enlarge the screen, make it look a little bit bigger for us to get closer to the action. One I wanted to show going forward here, because this is something I've been doing some detailed analysis of. Let me put up the performance report real quick, because I tried to put it on the Skype chat and didn't necessarily go. So if we look at it from here, a little bit of a dip because of these most recent trades that just came through, and that's understandable. But from my analysis, the whole point of going through what we had been going through is I identified about 140 loss points that can be avoided, and it would probably reduce winners by a dozen or so. But it would certainly skyrocket the profit factor by doing so. And what I was kind of indicating right here, it's rather simple. And you would think that it'd be easy to just plug that in, but unfortunately in doing so, all it does is shift buys to another location that's not necessarily favorable. So I have to create a run effect. So what I did was I was creating a show me study that was reflecting when magenta of the shakeout is falling, and that really is never a good time to be buying. So I kind of depicted this, and I even pointed it out when we were still trading even before this one came through, because similar situation, falling shakeout right there, not a good buy setup. And sure enough, I mean, it didn't work out. And while some of them do okay, like in this particular case, you had the falling shakeout, but it did produce a new buy just a couple bars later when you did have the cyan under red, which I'm working on that one to convert to where if you're in a zero pattern and you get that green, to go ahead and buy that. Of course, it ended up with a very tiny move anyway, simply because the rally just didn't go for very long, and then it faded back rather quickly. But in going through there, you'll if you go back on your own and take a look at this, you'll find it's very powerful in depicting areas where you can avoid less than stellar moves just from that concept. And what I'm usually looking for in this is when you get the downturn is a plateau. Usually I want to see 1 to 2 flat points before a breakdown continues. So like in this case where you have the solid flatlining of the magenta, and of course you want to be seeing yellow moving higher. It doesn't always have to be across, because if you get a steep move down, there can be enough separation where it's a little bit harder for it to do it. That's something we looked for. When you get into deep red though, you know, we look for that cross and that factor of at least 2.25 point spread between the cyan and the yellow and the magenta, and it makes a difference because that's how you capture some of the bigger moves. And so in yellow, I've marked the ones that would be considered satisfactory entry setups versus the cyan, which not so much. And you can go through, and it calculates out to well over 140 of those 293 losing trades. You know, literally cutting your loss factors in half makes an enormous difference from a profit factor. And so I just wanted to point that one out, because this is the beginning method of what I will use for a system that will also move into the short category, because it's a very effective approach from a short standpoint. And it's sort of matching my pink bar rather precisely. The few exceptions are when magenta is over 15, there's never any reason for that. And that will allow for continuation, because even in a declining from that point, then it's a reference to the shakeout, because if it ever goes negative, we know that we're in a continuation mode. So there are a couple more things I'm going to add to it, but I think that if you take a look at it in a review from just that concept, you'll see the significantly powerful impact that it does have in general. And so I think that's an exciting aspect. I'm working on the language for getting it to cooperate, which if only it was as easy enough to say what we can see, life would be easy, but it never is that simple. So I will keep at that though, but I think it's a really strong development, and I recommend that you take an opportunity on a 50K to go back through and look at some of these setups, and you'll find that does quite well. So I have a lot of data. I don't know that everybody can get this much backlog data, because this chart for me goes all the way back, I think to, let's look at when its first trade takes place, in 2015, so December of 2015. So there's quite a bit of range in this. You might not have that. You may only be able to get, depends on how much cash you've already got stored up. But this gives you an opportunity to maybe see some of the time periods that you don't have. So I thought I'd throw that one out there because it's an exciting one going forward for everyone. As always, though, I will update anything on the Skype chat. And I will keep trying to put up on the Skype chat. I was adding the performance reports of this and that, so you'll be able to see what the setups are for this one. I have another program or two on the 50K that I run with slightly different configurations and produces a little bit different results, a little bit more positive. I usually don't put that one up because it's more in my experimental category for stops and that. But can't hurt for you to have it, because maybe you want to be a little bit more aggressive from that construct, and never object to that. I think that that's why I've always created these setups for everyone, to give you the widest range to work within your own comfort levels, parameters, preferences, to make it customizable for you. So as always, I will continue to make any updates and send them out to you. But this is definitely one for review if you have the opportunity when the weekend comes up or in between market time. That'll do it for now, and looking forward to an exciting start to the month. I mean, already we get just the kind of volatility move that we were looking for that's going to create some more action. So very exciting stuff. As always, trade well, and talk to you later.